Right, hello everyone. On to the next subject. We will be talking about fractals and how price moves exactly the same way on every single time frame. Now, obviously, this only is true for liquid markets and markets that are illiquid. You'll see big gaps in price and things like that. Okay, but we're just going to go through two examples. This will only be a quick video and tutorial because the idea of price being fractal is already quite known. But for the people that are having trouble grasping the idea that price moves exactly the same way on the weekly that it does on the daily, these two examples should pretty much set that idea in stone for you. Okay, so we have two examples here. And before we move on, I want you to tell me if you know which one is on the daily, or even what one is on a higher time frame and what one is on a lower time frame. So we have chart B and chart A. Now, both printing the same setup that I talk about in the strategy. However, both are on completely different time frames. Okay, so I'll give you a second. So, chart B being Swissy on the 5-minute chart. Okay, now let's just look at this for a second. We have the key swing. We have the break-in structure right here, the obvious support resistance flip, the sweep of an obvious D swing, and then we return right into the raid base or raid candle right before shooting up. Now, what are we seeing here? We're seeing sell orders in the form of sell stops and sell triggers form below this low. We then see those orders triggered. Liquidity is generated in the market. Buyers now have the opportunity to enter at a more reasonable price. For price to reach below these lows, someone needed to be selling. Most probably the same people that were wanting to fill their orders below this level. But that isn't for today's subject. So we break the structure, we return, we mitigate, and we shoot up. So I'm just explaining to you exactly how price is moving right here. The market needs to move a certain way for orders to be filled efficiently. Okay. Now, just because it moves a certain way on the 5-minute chart doesn't mean that it doesn't move that way on the weekly chart. Now, a lot of you have probably seen this chart, but we have a sweep of two obvious key swing lows right here. Okay. Liquidity in the form of sell orders, so sell stops from people buying long at support, and then sell triggers for people trying to sell a SR flip or a support turn resistance. Now, we collect those orders and price shoots up. We break above the most obvious SR level, then forming a weekly or even monthly broken base. We then return right back down into the candle that swept the low. Because like I explained in the previous example, price needed to get down below these lows somehow. Someone needed to be selling, or certain entities needed to be selling. The same people or the same entities that sold here, whether it be retail or institutional traders or investors, would need to mitigate the orders. Okay, and what we're seeing here is demand at this level. Now, although I'm not trying to explain the strategy concepts to you here, all I'm trying to explain is price moves the exact same way on the weekly chart that it does on the minute chart or even the tick charts. The only exception being if the market is liquid or illiquid, then obviously the candle formations that you see will not be as clean. So although the price targets are still being met and price is still being traded efficiently, it will not look the same on the chart and you will not be able to trade it the same way. So for the day traders that are following this strategy, the scalpers, see me traded on Twitter or live on Discord, whatever it is. Okay, that is good. You get to see me trade. You get to see the strategy being traded live, but I do not, seeing as though I do not swing trade, okay, I'm never in a trade for more than a few hours at a time. I don't usually hold overnight. The people that do swing trade at first might see this strategy as a day trading strategy, when it's simply not the case. So price moves exactly the same way. And on top of that, the most optimal entries for swing trades statistically are still around the session open zones. So what do I mean by that? Every single trader wants to see the most ideal entry for their positions. For day traders, it means entering around session opens because that's when the volatility is at its highest, or at around news events and things like that. Now, statistically, it's the exact same for swing traders. So the most ideal, or the most optimal entry around these lows would be around the session opens or around high impact news events and things like that. So the time that you enter a trade will obviously differ, but it should not differ that much from the people scalping and the people running day trades. So yeah, I don't want to go into too much of a tangent. I think I'm just trying to explain that price moves exactly the same way on the weekly, the daily, the 4 hour, the 1 hour, all the way down to the tick charts. All right, on to the next subject.